financial health got the same care as your patients, this year might look very different. As a medical professional, you spend your life protecting everyone's health, but too often your own financial health falls to the bottom of the priority list. So today we're doing a full, quick, end-of-year financial health checkup designed specifically for you. I'll show you what you should be reviewing now before the end of the year, how to optimize your taxes before December 31st by maximizing how you apply your end-of-year donations. Keep more of what you make, manage debt more confidently, and set yourself up for long-term financial stability. There's still time to get it done. Let's get started. The end of the year is crunch time for more than just holiday shopping and New Year's resolutions. It's also your last chance to tidy up your finances before the clock strikes midnight on December 31st. For medical professionals whose busy schedules often leave little room for financial housekeeping, this is the perfect time to look at your earnings, your investments, and your deductions. So in today's episode, we're going to show you how to save on taxes, review stock sales, and organize your finances to set yourself up for a stellar start to the new year. So let's dive into the financial operating room and get your fiscal health in tip-top shape. Before we get started, I wanted to mention something. You may have some questions on this subject as we're looking to make some year-end or beginning of the year moves. And a few of you have reached out to ask how to talk or work with me, and it's pretty simple. All you need to do is book a quick 15-minute call at www.talktoally.com for a quick triage call. So whether it's this topic or like most medical professionals I speak with, they're worried about having enough money in retirement and questioning if they might even run out of money. So that's what I specialize in. My goal is to change and improve your whole perspective and give you some direction on what to do next. That's what I do in my practice. I find the money, whether it's for you or for an organization or for companies. That's what lights me up. So let's dive into some smart, actionable strategies that leave you feeling like you're closing the year out well and setting yourself up for a better year next year. After all, there's no better time than now to get things done and secure those tax benefits. So why a year-end financial checkup is vital? Well, think of your financial checkup as preventive care for your wallet, preventive care for your savings, okay? Without it, small oversights like missed deductions or unplanned capital gains can cost you big time. Here's why a year-end review matters. So we want to maximize our tax savings. Adjustments now may slash your tax bill come April. We want to avoid penalties. So double checking your estimated taxes and retirement contributions can help you sidestep the IRS penalties, okay? And then getting organized for the new year. Starting January with a clear financial roadmap is going to reduce your stress and set the stage for better decision making. What we're trying to do is set your stage up so that your 2025 is better than your 2024. Now, I'm not saying that 2024 wasn't good, but I'm saying, what if you can improve on 2025? One thing I would add here is, we all think that if we're making more money, it's going to make a big difference. But I think we can look at our lives and say, okay, from the time we were 18 to 28 to 38 to 48, we may have been making more money, but did it really impact our results? And a lot of times the answer is no, because as our income grew, so did our lifestyle. So what we're trying to do right now is tidy up some of the stuff for the year end so that you've actually got more in your pocket, more to be able to save whatever you want to do for 2025. All right, so first, we're going to review your tax strategy. So taxes are the cornerstone of year-end financial planning, okay? Medical professionals, especially those with higher than average incomes, can benefit significantly from a proactive approach. So make those last-minute deductions. Are you maxing out your tax-deductible accounts? So let's talk about those a little bit. So first off, we're talking about our retirement accounts. If you haven't hit the annual contribution limit for your 401k or IRA, now's the time to do it. Health savings accounts, I love these. Contributions to an HSA are triple tax advantaged. So they're tax deductible going in. Their often accounts have tax-free growth and tax-free withdrawals for our medical expenses. Okay, so while the money sits there, imagine that. If the money was sitting there, you may actually be making money on the money. So I want to take a minute here to explain a little bit about how this works. So we put the money in pre-taxes. So 100% of our dollar is 100%. It's sitting there. We go to Walgreens or wherever it is, we buy our aspirin, we're using our HSA money for that. We've got 100% of that dollar versus using our after-tax dollars, okay? So instead of having 60 or 70% of our dollar, we've got 100%. So I love these. So use your HSA accounts. That's great money. And you're actually making, think about this, money in an HSA, you're actually making 30 to 40% on that money just by putting it there for that use, okay? Charitable deductions, charitable donations. So donations that we make before December 31st can be deducted, potentially lowering your taxable income. And we just did an episode on this. So if you haven't watched it, you might want to check that out on YouTube. And a key takeaway from that is that if you're donating stock, if you're wanting to take a stock and donate that, we want you to donate the entire stock to the organization, whoever the organization is, versus cashing the stock, paying the taxes, and giving them the leftovers. So ask yourself in what you're donating, am I giving them the leftovers, or is there any way I can give them 100% of that dollar, and then you can have the 100% of the dollar as your tax deduction too? Okay, so this clip here on the page is talking about 2024 tax changes for physicians to know. Found this on the internet. I thought it was useful. Don't have to be a physician for it to be useful. It's for all of us, but you might want to pay attention to the details there. All right, so step 2, analyze our investment performance. Don't just focus on the losers in your portfolio, right? We want to look at the losers, but we also want to evaluate the winners too. And it's a good idea to rebalance your investments to align with your financial goals. So what I'm saying there is, let's say you owned 5 stocks, right? You got 5 stocks and one of them was like a super winner. My question is, going into next year, are you just locking that in, that you want that to stay the winner and that to grow? Or are you looking to rebalance those, right? And maybe diversify a little bit more. So I've got 3 questions here for you to ask yourself. You got your cup of coffee, you got your statements, and say, are my investments diversified enough? Am I on track for retirement? And do I need to adjust my risk tolerance based on life changes this year? Okay, so maybe something's happened in your life. You don't want to be risky this year in the market. What moves do you need to make? So again, are my investments diversified enough? Am I on track for retirement? And do I need to adjust my risk tolerance based on life changes this year? So next slide here, we're talking about capital gains and tax loss harvesting. And you say, well, what is that? Okay. Tax loss harvesting is a clever way that we offset our capital gains by selling underperforming investments. Okay. Offsetting our capital gains by selling underperforming investments. So here's how it works. We review our portfolio. We identify any stocks or funds that have declined in value. Then we sell them for a loss. So it's a loser, and you're saying, how long do I want that to be a loser? So we sell it for a loss. And when we sell that, we lock in a capital loss. Now, what that capital loss can do is it can offset your capital gains. So let me give you an example of that. So let's say you sold the stock A for $10,000 back in June. Okay, so you've locked that in. So we made money, we made a profit of $10,000. Then by selling stock B at a $10,000 loss in December, we've completely neutralized our gains. Okay, so I made $10,000, I lost $10,000. They meet here, just like the picture on the screen, and I've got 0 taxes to pay. So a lot of times what happens is when somebody locks in the losses and they're not offsetting that with the gains, you get these losses on your taxes that keep getting rolled and rolled forward. It's like $3,000 a year, which could go on for, the next 50 years or something. So this is a smart move to make before the end of the year, is we say, okay, we've locked in our loss. Is there a gain that we can offset that on? And then there's no tax bill. So remember that this works only for the current tax year. So you've got to finalize both of those transactions before the end of the year. So I'm saying the end of the year is December 31st. I wouldn't wait that long. My question is, why are you waiting? Because the market may not have the hours that you think you want on December 31st. If you're sitting there at 10 o'clock at night, guess what? The market's already closed and you can't do it. So let's get it done if you can do that. Again, my goal is to optimize the money that you've got in your pocket. So set the loss, take the gains, offset it for no taxes. Okay, step 3, audit your financial documents. As a medical professional, you're no stranger to paperwork. Even if you're doing it on a tablet, what I always think when I'm filling out the stuff on a tablet is how many papers it used to be. So neglecting our financial files can lead to missed opportunities. So here's a checklist of documents that we want to review. We want to look at our pay stubs. We want to look at our income, make sure it's all accounted for, and the deductions to match our expectations. So don't forget, if you've got a side hustle, and side hustle means it could be a proper job doing something else. Maybe you're working at this clinic, maybe you're doing that, but look at all of those pay stubs and make sure that the income is accounted for and that the deductions match your expectations. Okay. The next thing, retirement account statements. Yes, those things that are coming through your door or in your inbox that you're not opening. We want to confirm our contributions and we want to assess the performance. So the contributions may be something that you can see on your pay stub. But again, back to the last slide, how are those performing? And look at them before the end of the year, okay? Insurance policies, this is a pet peeve of mine, right? Are you adequately covered for the unknown? And you say, okay, well, Allison, how do I cover myself for the unknown if I don't know what it is? Well, we're going to look for any gaps in our disability, our malpractice, or our life insurance. And so kind of the test question I have on this is, if something happened to you and you couldn't work, or you weren't on the planet anymore, that you passed away, how is that going to impact the people around you? Okay. And the answer is usually around the paycheck that's coming in. So this is whether you're making $50,000 a year or $500,000 a year. If that income stream stopped, came to a complete stop, what would that do? And are you covered for it? All right. So we just went through the pandemic. That affected a lot of you as far as your work. So you've had some inklings of that. So pay attention to that and say, am I covered for the next year in case something happens? And then the last thing I want to say here is talking about our debt statements. These are balances and interest rates on student loans, on mortgages, and on other debts. These things can creep up during the year. So even if we see that interest rates have come down, right, we see the stuff in the news, it doesn't mean that that's affected your statements or the company that you're doing business with. So I want to take a look at that, because you may want to realign. Am I paying this off first? Am I not paying this? What am I doing? And just based on what those rates are can be a significant difference. Okay, so we want to plan ahead for next year. And by tidying this up now, you'll step into the new year financially refreshed, right? Here's how we want to prepare. I want you to set financial goals. A goal is clear and actionable, all right? This is not a dream. This is not something you're thinking about. So whether you want to save for a vacation home, you want to pay off your student loans, you want to retire early, I want you to write these down. My preference is that you put it on a piece of paper. And if you can put it on your calendar, you're saying, here's the last week in December, here's what I want. Go over to the first week in January, here's what I want. And maybe you're just putting that on every month of the calendar after that, okay? Yes, you can use your phone, but I want it somewhere where it can be in front of you, in your face. That's your goal. It's a reminder, right? Subliminal message. We want you to automate your savings. I want you to schedule automatic contributions to your savings and your retirement accounts. This could be using a savings account to, maybe you're putting in $100 every paycheck into a savings account, planning for something that you want, planning towards a vacation. Whatever the amount is setting that aside, including your retirement accounts, so that instead of digging a hole using credit cards, things like that, you've actually got an account set up for that. And then we want to update your budget. We want to adjust for any anticipated changes like increased child costs or a new car purchase. So for me personally, health insurance has gone up significantly. It's gone up 33% since last year of what I'm paying. I'm a healthy person. I never meet the deductible, but my health insurance has gone up. So how do I plan for that? Well, it's not a big, hairy budget spreadsheet on 5 pages. It's very simply to say, what do I think my monthly expenses are going to be in 2025 compared to 2024, and accounting for that. So we want to do that. We've talked a lot today about end of year and first of year strategies and tax savings. If you'd like a quick call to discuss any of this, or if you've been thinking about money in retirement or tired of thinking about it, or don't know where you are, or maybe where to start, or even looking for a second opinion, just like a medical diagnosis, it's probably time for a quick calibration check on what you're doing. So we can easily do that on a quick 15-minute triage call and talk about it. Don't overthink it. Stop waiting for the perfect time. There is no perfect time. I recently did this call for a medical professional and found $6,500 a year without even getting into my process. Think about that, $6,500 a year for 15 minutes. I'd say that's a pretty good investment. So that's what I love about what I do. I find the money for people, for organizations, for companies. That's what lights me up. So this is how we get things moving and set you up for a great next year and beyond. Let's do this. We'll see you soon.